You see? I see.
You see.
Stop. Stop. Matt, breathe.
Joker, something's wrong with him.
Welcome to my chaos! This is the cage! The king has arrived!
Stop. Something's wrong. Vec, he's in me. Where are you? He's here.
This, you, isn't real. John! Oh, baby!
You don't get to be his puppet.
Fight me, not him. I can't. Obey. Cut the head off of the snake. You don't control me. Obey.
Matt! Fight it! Obey! You can't stop this!
I'm not fighting him. I'm fighting you. Obey. He's still there. Then we finish it. He's still in my head. Then we end it.
Miss me?
Yeah, something like that. Stay sharp. I'm good.
Good. Let's break something.
Stay sharp.
Obey!
Not happening.
He's not slowing down!
Obey!
He's fast!
Stay on him. No. Obey.
Finish it!
Obey! You done. To the cage. Enjoy the show.
Welcome. I hope you liked the new character, Vector. He's wearing the stupid fanny pack of Matt Kors. I wish I could have done some sort of like hip-hop jam afterwards just so he could be dancing to it. That would have been absolutely hysterical. But yeah, hope you like Vector. He was kind of inspired off of Billy, if you guys remember him from a ventriloquist movie with the Curse of Mary Shaw and Chucky. So I thought it was a good combo for a bad guy. And his power of manipulation and mind control is helping people that are watching Matt Kors on YouTube, manipulate markets. And that's the whole purpose of that. And I was just really just trying to make fun because it's honestly, my dad calls me the other day and he's just like, you're never going to believe who's on YouTube. I'm like, who? He's like, Matt Kors. I'm like, yeah, right. You're joking me. No, there he was. I'm like, perfect opportunity for me to make a fanny pack. I was excited. So besides that, welcome. So we got some other stuff that's going to be cool today. I'm not sure where Matt is, to be perfectly honest with you. I think he's taking a nap time, but that's okay. And we're going to go on anyway. And we have a good dum-dum. We actually have two good dum-dums for this week. Chaotic decided to pick a fight with a personality on Wall Street. It just happens to be the dum-dum of dum-dum-dum-dum-dum-dum-dum. Chaotic, how are you? Did you find dinner? Maybe. Or not. She might be eating. Either way. But dum-dum. So one of the things I did want to talk about and kind of wanted to stress out to everybody, because everybody I see that's on social media and social media platforms all around are talking about this reverse split. And I don't understand why. I really don't. Do you honestly think that all of a sudden AMC is just going to magically poof out of nowhere and that the street is going to lose all that money? No, they're not. They're not going to. It's not going to happen. I don't care if it's 3 days. I don't care if it's 5 days. I don't care if it's actually 29 days. I really don't care. Besides that, there's so many exemptions. There's so many other different forgiveness packages that they can ask for. They can also ask for the world where it wouldn't happen for at least a good 8 months. So it's not going to get delisted. So we don't have to worry about that. Second of all, there are, like I've been telling you guys, the macro is the battlefield. That's where everything is happening. It's not just a singular stock. It's not the market itself. It is the entire picture, which is your macro. That is your battlefield. That's where everything's going to come to focus. That's where everything's going to happen, no matter how you look at it. So when you go ahead and you're actually like taking account for all this stuff, I mean, here, I'll give you a perfect example. While I'm waiting for Chaotic to be done eating, because I know she was out with Little Man. So every country's market is crashing right now. Every single one. If you look at the S&P 500, NASDAQ, the Nikkei, Hang Seng, Kospi, which is Korea's, the Sensex is India's, Nifty 50, India, DAC, CAC, which is France, IBX, Spain, Shanghai, Brazil, and Australia. All are down. All of them. Down 8.5% from all-time high. The NASDAQ down 12%. Nikkei down 14.1%. And that's going to keep going. I'll get to that reason why in two different spots. The Hang Seng down 12.9%. Korea's 7.6% down. India 10% down. Nifty 10.5%. DAC 2.8%. CAC France down 3.5%. IBEX down 5%. Shanghai down 1.7%. A lot of this has to do with oil. Because when oil goes up, guess what happens to everything else? Everything gets more expensive. Area supply lines stop. Everything stops. So you don't have to worry about where global trade is right now, because that's kind of hung out to dry. Listen, and the other thing that's also aggravating as hell is when you go ahead and you map out what the initial plan is, what the government's plan, what they're trying to do from this war, and what they're really trying to accomplish, it's all bullshit. Like, what is actually true? Do we have pictures? Do we have troops? Or do we have troops on the ground? Do we have, actual reporters that are on the ground? I know when I was overseas, we were trained specifically for reporters, just so we wouldn't give out information that was needed. You're trained. So where are the reporters? Where's this? Where's that? I mean, and every time Trump says, oh yeah, they're going ahead and they're giving us oil and blah, 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 and they're going to open the strait and everything's going to be great. You have a representative from Iran who's saying, I don't know who he's talking to. So what's the answer? What's the truth? I don't believe anything that's being said out of our government. You have $12 trillion in global market value gone. That's more than Germany, Japan, UK's entire annual economic output. Another 2.5 trillion just wiped from global bond markets. And crude oil is up 57% since this war started. Right now, $1.15 a barrel. That's a problem. But to get even further along into this, which I'm going to do, let's compare this to 2008. The little hiccup that's going to be in comparison to where we're currently at. The S&P took 4 months to lose 10% from its peak. In this war crash, 10% is gone in 1 month. 2008's crash took 17 months total to bottom at negative 57%. At this pace, 2008 scale arrives in 6 months. Yeah, that's I'm going to do it again. And the one thing that's going to probably kick it off is the negative carry trade. That's honestly what's going to probably start this whole fiasco. Because if you notice on Friday, the yen to the dollar finally hit that 160 mark. It hasn't happened in 31 years. And the last time it actually happened, I mean, everything sunk. And I mean, just here's a swirling toilet. I don't care if you're in Australia or if you're here, they're both going down. And that's what's going to bring everything down. That's what's going to start. Then you're going to have private credit. And then it just keeps on cascading into something worse and worse and worse and worse and worse as it progresses. Because then it starts affecting every single market. And it's real funny is that all of a sudden today, you know what they actually started talking about on the regular or news? Commercial real estate. I was shocked. I mean, shocked that they were even talking about it. I mean, they haven't spoken about real estate in forever. And yeah, absolutely above 160 because they can't intervene. That's the beautiful part. They can't intervene into it because the more they intervene by dumping more yen or, yeah, it's actually just dumping yen, they prolong what's actually going to happen. And it's going to get a hell of a lot worse. By them keep on intervening, keep on doing what they're doing. It is going to get so much worse if they keep on intervening. What's really going to happen from that is that directly ties into your private credit. From private credit, that's where your reach expands. From there, that's where it starts targeting commercial, residential, your stock market, your bond market. And that, once it gets to the bond market, which could be before any other market, to be honest with you, oh boy, do we have fun that's coming from that side of the world. And I would tell you what a certain individual said, but he's also my dum-dum of this week, so which we'll be going over here soon. But the problem that I have with all this is just, it's better to just rip off a Band-Aid as opposed to try to slowly peel it back. Just rip it off. Rip it off, be done. At least you'll be able to fix the problems faster, but we all know that they're trying to go ahead and make sure oil is through the roof, so this way it causes inflation to spike, which also in turn basically works into the elite's master plan on trying to take over everything. Because that way it's a reverse funnel upward as opposed to, the greatest wealth transfer back over to us. So it's a lot of things that are very, very interesting from a macro perspective right now. There's a lot of things that are interesting in regards to AMC. There's also a lot of things that I discovered over the weekend that between AMC and then also GME, and especially referring back to our good friend Ape. Who-wee. I think we're pirating China's oil and they're keeping the silver. We don't have the Jatams, HIMARS batteries at. I mean, yeah, I wouldn't be surprised. China is trying to go ahead and become the metals market of the world and take over the London Metals Exchange. I totally agree with you from that standpoint. When it comes to silver, which is one of your direct products for lithium, and that's what you need for lithium. That's huge. That's huge. So it's going to be interesting. I think Japan is your direct counter for when they start dumping treasuries, but I also think Japan, which is the largest bond holder or treasury holder of our debt, I think that's the biggest problem. And when they start dumping treasuries, don't think that China's far off from dumping our treasuries either. They're going to have to, or they're going to, just in spite of us, because we're not on friendly terms. Just put it bluntly. And if they did try to do anything when it comes to the stable coins and wiping out the debt, I wouldn't be surprised if that red button's hit. Not at all. It's just funny how things work. It really is. And it keeps on getting better. And yes, okay, AI and critical metals now. Yeah. They're trying to scalp gold, which I don't understand why that they're trying to scalp gold. I find it very funny is that a lot of options or futures on silver and gold right now by December are, I think they were projecting it was silver between $900 and $1,000 an ounce on silver and for futures in December. Same thing with gold. Gold was like 30,000, 50,000. And the options were just huge. Huge. And I don't understand. I mean, it's funny because that's what happened when China actually exposed the true price of what silver and what gold actually is. They had their little break for their new year, and then all of a sudden they came on board, came alive, and all of a sudden they're way different than what we have it at. Oh, wait, we're on paper. We can't change, we can't fix, because if we get rid of paper, it exposes way too much. And by exposure, I mean problems. Because there's a thing called over-evaluation of equities, of assets, of property. And it keeps on getting worse. Have you guys thought about this? Just humor me for a second. Is that if you look at a month ago, exactly a month ago, we were just touching 7,000 in the S&P 500. And look where you're at now. Literally. 63.43 right now. Hoo-wee. And just keeps on getting lower. And lower. And lower. Because things aren't actually valued at the prices that they think they're actually valued at. Which also causes another problem. Is that all these funds are restricting withdrawals. And because everything is so overvalued, now you're sitting there is that, okay, you're allowing me to withdraw, let's just say 4 or 5%. But that $10 that you were going to be able to give me at 4 or 5% actually was valued at $5. So I'm really only making about 50 cents when it comes to that withdrawal. Because I'm way too overvalued. And that's an even bigger problem. That's crime. That's crime in hindsight. And it still continues to get worse and worse and worse and worse. But am I dumbfounded? Am I shocked? No, not at all. Not at all. Why? Because I knew this was going to fucking happen. Literally called this 5 years ago. This is the everything crash. Everything is going to burn. And what started it, honestly, was just real estate. When they had a 0% federal fund rate in 21, or 2021. I'm telling you right now, you could have gotten a 15-year term on a rate and term refinance for 1.75% on a 15-year. No questions asked. Would you lose that rate? I know I'm not. I know I can live in my house, I mean, just fine for however long. It doesn't matter. Because I'm never going to get that rate ever again. Ever. I don't care that I move. Fuck that. I don't need to move. Please. Get out of here. I'm not moving nowhere. So it's honestly, I couldn't be happier because I know it's just going to get better. And it's going to get better for you guys as well. Everybody that's invested in the meme stock, that's your hedge. Guess what? It's going to get better. Why? Because it's going to detach from the fucking SPY. Same thing with GME. They're both going to detach. It's just inevitable. Because eventually what's going to end up happening is that because of this overvaluation, because hedge funds don't have the liquidity to actually hold their positions, because everything that they've done, they're trapped. They honestly are. They can't let this thing get below where it's at right now. They're screwed. I mean screwed. Because how are you going to close out? I mean, if I'm a short right now, and if we're at these prices, why haven't I closed out of my position? Why? I mean, why haven't I closed out of my position if we're at these levels? Why haven't I? Right now, you're having to post 150, 175% of collateral just to hold your position. Good luck. So I'm at a 2.45, and every day I get mail about taking out an equity at 5 to 6%. They can't make up the money on mortgages. You can't. It's impossible. And that's what's directly affecting your bond market. Because you have all these mortgages that are written on higher interest. And when you cut interest rates like you were doing, you can't afford the old interest that you were paying on those previous loans. So guess what? You got a problem. Now you're trying to play catch up. Now you're trying to force points on the next borrower, which doesn't happen. It just doesn't. So now you got banks that are becoming insolvent, or banks that are having to go ahead and sell bonds for cheaper than what they're actually worth just to try and save themselves. It doesn't happen. Because now the next servicer of those bonds isn't going to be able to collect. They're definitely losing premium. And I guarantee you they're pissed. And it only keeps cascading towards a way that can't be sustained, cannot be, it can't work. It just doesn't work. This is where math doesn't work at all. So now we have multitude of problems all across the landscape as of right now. And it's fine and dandy, to be perfectly honest with you. You guys should be happier than a pig rolling in shit right now. And that's just because of everything is crumbling around them. This whole thing with the SEC and the CAT system, yeah, granted, it's bullshit, but do you know why they're doing it? I mean, let's take the fluff out of the report, okay? They're going ahead and they're stopping the CAT system. They're going ahead and they're stopping the, all the criminality, all this, all that. They're basically pointing and saying, hey, we're going to have to lend from this to this equity to borrow against this equity. Why? Because we oversold floats. But they're pointing directly at where they have to go. Oh, you have to borrow from here to go to there? Oh, here. Perfect. Thanks. Thanks for telling me your plan. There's always winners and losers. The percentages always stay the same. They never change. It's a zero-sum game. If they borrow from here to put there, you get to know where they put it or where they take it. So instead of actually relying on a consolidated audit trail, you're blatantly looking at, hey, we had to borrow from here to put in there. And guess where they're probably pulling it for? You, GameStop, Meme Basket. Because we're not selling. None of it. I'll explain in a little while why. The why in all this. Let's just say when Adam Aaron said checkmate for your preferred equity, he meant what he said. I'll show you the mechanics on how it actually works. Because this is the reason why you also get reports, specifically today. Hey, there's a lot of unusual options trading going on right now. Really? Oh my God, I didn't notice. But if you go ahead and look at the actual trades that are posting in options right now for specifically AMC, guess what? They're through the fucking roof. And there's a reason behind it, which I will explain to you. Chaotic, you alive? You still eating? Snack lunch. Maybe she still is. Maybe I'm the lucky one that only gets to do my dum-dum, which I don't mind at all. Because my dum-dum, it's, you know what? Let's just be honest here. I'm going to have the best dum-dum regardless, I think. Unless Chaotic does show up, because she actually put in the work of, like, finger pointing and calling out and all of that. So, do I not? Nah, you know what? We can. I give you all dum-dum of the week.
Look at me, I'm the genius of the hour. Wearing my paper crown like it gives me superpowers. I brag about my L's like the trophies on the shelf. Too dumb to know I'm dumb. I'm impressed with myself. Every week there's a winner, but this time it's me. I beat a whole damn crowd with my stupid
Dum-dum for TV.
I'm the dum-dum of the week.
Dum-dum for the Stanchion Funk. Say it how we know the for it.
Beat my drum. I don't read, don't think, don't double check a thing. But I'll scream real loud, like I know something. Hey, I'm the dum-dum of the week. I clicked the scam link twice, thought it looked legit. Told everyone online, like a certified twit. king of Cloud Mountain.
Dad, look at that, Are you even listening to me?
Dum-dum of the week. Yeah, I'm proudly dumb. Got a
Are you listening to me?
tilted while I beat my drum. I don't read,
dumb
don't
to
think,
argue.
don't double
Hang
check
on,
a
sit
thing.
back.
But I'll scream real loud, like I know something. Hey, hey, I'm the dum-dum of
New personal
the week.
best.
Skank left, skank right. Watch me lose another fight. Trip over my own feet. Still brag about the feat. I'm a legend in my mind. IQ left me behind.
I'm a
But
dumb
smiling
ass
ear
shill
to
on
ear.
FX.
'Cause the crowd fits perfect here.
Here, hey, here.
I'm the dum-dum of the week. Yeah, I'm proudly dumb. Got a paper crown tilted while I beat my drum. I don't read, don't think, don't double check a thing. But I'll scream real loud, like I know something. Hey, hey, I'm the dum-dum of
I'm a
the
dum-dum of the week shill on X.
Hey, Rachel, I've got a Scott to live.
I'm the dum-dum of the week.
I love that. I'm sorry. That's a great song. Really is. On top of it being a great song, it's also funny as hell, especially because I put a dumbass shill on X. So, anywho, but I'm going to go over my dum-dum first because Chaotic is going ahead and actually bringing Little Man back to home. So, and as soon as I'm done, then she'll go do hers. So, either though, mine is my good friend, my best friend, Jerome Mr. Burns Powell. And speaking of Mr. Burns Powell.
And I contend.
Nope. Which one?
We're losing altitude. Time to dump all unnecessary weight.
What? Don't dump me out. I can lose weight. Just give me a chance. 1, 2. I'd rather die.
It's no use. We've got to make an emergency landing.
Well, at least we're all in this together.
Now, we have 3 parachutes. This one's for me, and these 2 are gifts for my nephews. Tally-ho!
So, Mr. Burns Powell, he did a wonderful thing today, and he blatantly, I mean, just blatantly came out and said it. I mean, I don't know how you can mess this up in any which way, but here's, he goes ahead and he starts talking. He was doing an interview today, and while he was doing an interview, he basically goes ahead and starts saying that, well, we've never had instances where like a run came on, power, water, a utility. And I'm like, okay, why are you saying that? That's weird. Then all of a sudden, the Federal Reserve purchased a short-term duration T-bills, just hit a record of $344 billion, surpassing the height of the 2019 bank repo crisis that was also covered by COVID. And I'm sitting there and I'm thinking to myself, wait a minute, I know him and Trump aren't good buddies. I know that him and, basically the rest of the United States, basically are calling his ass out. Orchestrated the position that we're in, and is just so scared to do anything that would actually benefit anybody. From a middle class perspective, if it could benefit us, he ain't gonna do it. So it seems like to me, and while he's going ahead and people are posting about Jerome, Mr. Burns Powell, what I've come to the ultimate conclusion is that he's blatantly pointing out how it's going to happen and where. Oh, hey, let's just look at utilities. Funny, why would you say something like that? Well, no reason. Just don't look at me because I have to do things by the book according to, economic practices and, yes. He. You are the biggest clown of the Federal Reserve chair that I've ever seen. You couldn't fix inflation. You were too scared to go ahead and actually stomp that. You are playing into the elite's hands of going ahead and doing whatever the hell they want to make sure that their positions, they vacate them before anything dramatic happens to them. And your schedule of rates where you're on a roller coaster, a constant roller coaster, is just too unbelievable to actually write about or fathom at this point. It doesn't make sense. And if you're looking at it from an economic perspective, like, you should be doing things to actually benefit. Right now, there should be no cutting rates. None whatsoever. They actually should be raising them. Why? Because that's the only way to stop inflation. The only way. You raise rates to curb inflation. You don't cut them. Cutting them injects liquidity into the system, which you can't do because there's so much fake liquidity that's circling through the system that is the main reason for these bubbles. It's the main reason for this inflated market. That's the main reason for overvaluations. You are setting this up perfectly for the ultimate, everything crash that you could ever see. None of us are ever going to see this ever again. You will be a part of history. You will be a part of probably one of the greatest case studies of all time from an economic perspective. This isn't going to tie into the stock market, but it will tie into specifics in regards to the meme baskets, because we are a direct reflection off of Jerome, Mr. Burns Powell, and what he has done economically for equities to be put into positions of either strength or weakness, and all based upon who his bosses are, which are the banks. I wouldn't be surprised if there is. I always make this comparison, but I find it so funny because it seems so true to me. Is that here's Jerome, Mr. Burns Powell. Okay, here's the quote unquote boss that we see up front, which is Trump. But I think it's a group of what they call themselves to the Patriots, just like in Metal Gear Solid. Here's the Patriots. There is 6 appointees of the Patriots, or if you want to put it towards modern times, let's think of like John Wick and the High Table. There's 6 different chairs. Each one of them decide the fates. Now, this could be the oligarchs. This is the Rockefellers. This is the Bushes. This is the Rothschilds. This is the Hiltons. Like, they could be those families that are telling our executives what to actually do. And would that shock me? No. Not at all. If you guys ever if you could find this, it was on YouTube. It's called the Committee of 300. It is a really, really it's a frightening documentary of how the societal shift should actually be with the oligarchs that are in charge now. And it's scary what they actually propose, because the God is actual money, not whoever you believe in. So that's part one. The other part that I'm going to do a dum-dum on, just because she really, really deserves it, because she has done absolutely nothing from an SEC chair position, is Hester, I may be a man Pierce. I mean, she may be excessively jerking off on Pornhub right now. I don't know if she's actually doing that, but she has done absolutely nothing in her position. Nothing. Hasn't made one decision, hasn't made one career altering, anything. When you think about it, everything that she has voted on from a SEC chair position has been towards banks, towards hedge funds. Never been to protect retail, which is her primary function, being in her position as an oversight in the SEC. That's why the SEC was designed. And what do you get? You get Chaotic, who goes ahead and she posts a video about at the SEC mocking the retail investor and spending taxpayer dollars to do so. And then her whole account gets blocked. She's done a whopping 0.0 for anybody, everybody. And I don't understand why she's still in a position of power. Really don't.
James.
Hey, we got a friend. Hi, friend.
Oh my goodness. Sorry that took so long. We were having some dinner and the restaurant was a little bit slower than I expected it to be, but we got some free churros.
That's
so
okay.
totally worth it.
That's okay. I've been just absolutely, making fun of Jerome Mr. Burns Powell and going after Hester Pierce real quick, just because it was worth my time doing so. Because I love when I go on rants. My rants are hilarious because I just get angry. But I wanted to go over your dum-dum, because your dum-dum is also a good one.
I have a good one this week. I actually do. I have a really good one this week.
No, I'm sure everybody is excited to hear it. Hey, we got Hester Horseface Pierce. Great name for a racehorse. Do you know what? That is actually a great name. Can we put Secretariat somewhere in there too? That'd be awesome. Go ahead, Chaotic. What's your dum-dum? Dum-dum-dum-dum-dum.
Can you still hear me?
Yeah, I can.
Okay, good. Okay, so my dum-dum of the week. I'm sure we all saw it. What, baby?
That's what Night Out in new.
I know.
When
Little
the
man,
talks
little
to
man.
the dum-dum,
Dum-dum.
he's
Yeah.
like gum-gum.
Yeah,
That's
dum-dum.
right.
That's our
That's
segment,
right.
dum-dum.
That's a mean from Night Out in new.
My night at the museum. That's right. Okay, so my dum-dum of the week. We've all probably seen the post. I guess the guy's name is Sexy Stock Slayer. I don't know. I get the impression he doesn't speak English as a first language. We'll put it that way. We'll just start with that. Also, he posted this picture of him. This was right at the very beginning of when Project Hail Mary came out. It was like right for opening day. He was posting like what a terrible experience he had, and the candy was $8. And I just I had a few spare minutes today in between tasks while I was waiting on something, and I couldn't help but notice, because we just went to I just got the A-list subscription in the last month, so we've been going to movies like crazy. I said, $8 for a bag of candy? What did you get? I said, because I don't see a single box of candy anywhere in this building that is $8. What did you get?
Was it a golden ticket Wonka bar?
Well, he wouldn't say. And he goes, well, I'll post a receipt. And he posts a receipt for $26 from Cash App, but it's not like a line itemized transaction, even though we know good and damn well everybody is doing this through the app. So it would be really exceptionally easy to like screenshot what you purchased or. But the first thing that was super sus is the fact that like he went at like 10:30 in the morning for like the day one of Project Hail Mary, and he was acting like AMC, this movie's gonna be terrible, the experience is awful, and this movie's gonna suck. And really,
Mommy,
what?
you talking about me?
No, I'm talking about somebody else. I'm talking about. Why would I say that about you?
Oh. I thought you would be me.
No, my goodness. And so it gets better. So it starts with the candy. I started with the candy, and like the more I asked questions, like the more obvious it was that like he was completely full of shit. So he's like, there's not anybody even in here. It's like, so the lights are all on, which means you're at least like 20 to 30 minutes before the start time. Like the opening credits haven't even started yet. Like we're not seeing trailers yet. It's just like the lights are on. There's only a handful of people in there. It's like, yeah, would you do that at 10:30 on a Tuesday morning or whatever it was? Blah, blah, blah. And then he changed it up and he said, well, it really wasn't one bag of candy. It was two. And at that point, I'm like, now, okay, so we're getting somewhere here. I said, so well, you saw Project Hail Mary. I said, this aged like milk. He goes, well, this is the worst IMAX experience I've ever had.
Did you even go to an
AMC is
IMAX?
a terrible theater. AMC's IMAX theaters are poor quality compared to everybody else's. And I laughed. I said, that is not an IMAX. He's in a regular movie theater posting from the back saying he had a terrible time at IMAX. I said, we need to talk more about this. How the heck? I said, that's not an IMAX theater. And he starts to argue with me about the quality in AMC. I said, so AMC is the only one, this one location, the Times Square location for AMC is the only movie theater anywhere in the world with a mini IMAX theater. That's what you're telling me right now. Because that's not an IMAX. I said, I can see the delineation in the ceiling where it angles off. I said, he tried to say it was the same thing. I said, no, it is not. And then we go back and forth for a while. And then he starts to say, well, AMC ripped me off because I paid for IMAX. And then I started laughing. He goes, I'm going to demand a refund. This company's scamming me. I said, AMC is not responsible for you being
Gargling you were
and
gargling
sitting
marbles.
down and watching a whole movie that way without realizing you weren't even in an IMAX theater.
I mean, hold on.
So
Well, before
you're not getting a refund and you shouldn't.
Before you continue, so first things first. I mean, and I'm sure every person that has either A-list or goes to an AMC theater, your tickets are on your phone, on your app. First and foremost.
And even after you get past the person at the ticket check booth tells you what theater to go in. You mean you ignored that person, and then as you kept going, you ignored all of the big signs that label where the IMAX theater is? Because he was complaining that the IMAX theater next to his theater was rattling the walls. And I laughed. I said, that is physically impossible because they are completely sectioned off in two different portions of the facility, so that can't happen. And so we went from the IMAX theater was rattling the walls of my regular theater to no, I was in the IMAX theater, which is not an and the picture is him not in an IMAX at all. He's in a regular theater.
Last time I checked, that
so
the speaker quality just in IMAX alone is Atmos, which is going to go ahead and be louder anyway because the actual sound immerses from behind the screen.
Well, and the thing is, like, the IMAX theaters are not designed by AMC. I had to point out, IMAX is an entirely separate company that is independent of AMC. Their engineers are the ones that design these theaters to look a certain way, to be soundproof a certain way. There's not even I said, you're not getting a refund because no normal, rational human being would ever make this mistake. You cannot tell me, and I posted a clip of Project Hail Mary on IMAX screen. I said, there is no way you can possibly tell me with a straight face that you couldn't tell the difference.
Well, you see, it's like this. I wanted to, but I didn't. I just went into a different theater because, I couldn't show AMC anywhere, and even the picture, it doesn't show AMC on anything.
Well, and before I lose reception, I want to, in case I cut out, I want to leave you with the last, most important detail because I pressed him on what theater he went to because he wouldn't talk about how when I was pressing him on the food prices that he $8 for two candies. That sounds about right. The $26 transaction for a large popcorn, two candies, and a drink for $25.99 plus tax sounds about right. But that's for two people. And then he said he brought a friend with him whose name wasn't spelled right on his phone, saved as a contact, and where he said, "Oh, we paid for IMAX." Well, then it's your own fault for not noticing the difference. Like, at what point is the company responsible for your stupidity? Because I feel like it starts and ends with the fact that everyone told you where to go, and you went in this room anyways.
Did
But
he find a friend on Messenger or something, and then they
but
decided to
it's
go to a movie?
But I think it's funny that it's always the Times Square AMC location specifically that these posts trashing the company that go viral about their actual theater experience. Hold on, sweetheart.
I took cold.
Okay, I'm gonna shut the AC off. Okay. Um, this is the third time now that I've seen. There's been three very notorious times where the AMC Times Square location, specifically out of all the movie theaters anywhere in the country, even those belonging to AMC, is always the Times Square location, which I just kind of wonder why that is. It's awfully specific considering how many locations there are. Well, me and James looked it up before we started the show, and it's only 15 minutes away from where Wall Street trades. It is 15 minutes away. It is the closest AMC to Wall Street. That's why they keep choosing it.
Actually, it's 12 minutes on an Uber or a taxi, and
12
then
minutes. If
it's 14.
you take a cab,
And it
12 minutes.
14, 15 if you decide to ride the train.
So normally I don't go hard on those shill posts that way, but this one in particular, I kind of felt like I needed to because of the fact that it was very specific to the AMC Times Square location. Once again, and this is the third time now, you guys, it's baseball season. I like baseball rules. 3 strikes, there's something going on here, and that's kind of what prompted us to go look at what was going on.
I mean, dumb. I mean, just dumb. It's sad. It's sad because that's the only thing. That's a good one. I'm not going to say that one out loud, but everybody can see that one. That's a funny one. But it's anything to get your mind diverted from what the actual reasons are, what you thinking logically, which are all that. I mean, that's pretty much what it is. And it's stupid. It really
Our
is.
dinner, we're taking a look at just opening the park around the lake where we go camping. So we're just
Fun times. You're gargling marbles.
look to see what things up.
Yeah, you got that gargling marbles. You're kind of sounding like Batman. You're the
That's
new
what I
Batman.
said. The reception is in and out over here on this side of the lake, so I may have to circle back.
Yeah, circle back later on. No big deal. Because I'm going to start going over some of the main stuff that I did want to touch in on, especially from where we're going to go from a war landscape, which is your macro battlefield, which is where we actually are going to segue into right now as we speak. So, without further ado on that one, AMC. I got to bring my interactive bar up and interact. There we go. Nope, didn't want that. Hold on. There we go. Make you wider and make you bigger. And here we go. Welcome to the global meltdown. The elites didn't see this coming. Or did they? The global economy is perched precariously on the edge of a cliff. And trust me, it's not going to be some graceful slow motion fall into oblivion. This is going to be a high-speed, catastrophic plunge, likely to break into 1,000 shards of financial ruin. And those shards will pierce the very fabric of the global financial system as we know it. What's unfolding now is not a freak accident of timing. This is a carefully engineered disaster. The elites have been setting the stage for this moment, and as the pieces of this crumbling puzzle start to fall into place, one thing has become clear. You're either going to come out on top or be left with the crumbs when it all falls apart. Don't kid yourself. This isn't some random event. This is not just letting things happen. It's being orchestrated. The government, the Federal Reserve, the financial system, they're all a part of the machine pushing us towards this downfall. They might look like they're scrambling, trying to fix it, but their efforts are nothing more than putting out fires with gasoline. It's not an accident that the system that is rigged against the average person. In fact, it's designed that way. The rich get richer, and the rest of us get to sit here watching the house of cards collapse around us while we wait to see if we'll get caught under the rubble. This is the thing. There are always winners and losers in any financial crisis. It's a zero-sum game, folks. For every winner, there's a loser. And right now, the winners are the big hedge funds, family offices, central banks. The losers are the everyday people, the retail traders, the workers, and the ones who still believe the system is rigged in their favor. The rich are sitting pretty, profiting from their misery that's about to rain down. But here's the ugly truth. You have a chance to flip the script. This is your one and only shot. The system is about to break, and if you're on the right side of it, you stand to change your financial futures forever. If you miss this opportunity, it may never come again. The elites think they have it all figured out, but they underestimated the chaos they've unleashed. Take Japan, for instance. They think they can control the storm, but guess what? The storm is coming for them too. And this time, they might not be able to escape. Let's talk numbers and reality, because despite what the mainstream media and the talking heads want you to believe, there's no hiding from fact. Japan. The Japanese yen has crashed to its lowest level against the US dollar in 21 months. And with Japan has intervened before when this happens. It's nothing more than a temporary fix. Their currency is being decimated by import energy costs, with Japan relying on the Middle East for 70% of its oil. If that Strait of Hormuz were to close, it would be game over for them. Oil prices above $100 a barrel and a weak yen are a recipe for disaster. When your currency weakens, everything you buy gets more expensive. Energy, food, raw materials, all of it. And when the Bank of Japan intervenes, it just creates a global ripple effect, sending U.S. yields higher and tightening the screws on financial markets worldwide. So while the Bank of Japan may think they're saving the day, they're actually just delaying the inevitable when it unravels. It won't just be Japan that suffers. Dun dun dun. Market stress, meme stock mechanics. Oh my God, it's a global catastrophe. Bond market stress, collateral weakening, margin calls, forced shorts covering, AMC Ape conversion pressure, GME warrants, mechanical squeeze. What a shock. It'll be a global catastrophe. But wait, there's more. The Federal Reserve, the supposed lifeguards of the U.S. economy, is now in a corner. And trust me, it's not a corner with a nice little escape hatch. After weeks, and I mean weeks, of wars, skyrocketing oil prices, staggering 92,000 jobs lost in a single month, the Fed is left with three equally disastrous choices: Cut rates, bad idea. Inflation is already running hot, and cutting rates will only fan the flames of the crisis they can't control. Raise rates, well, let's see where there's over $3 trillion in zombie corporate debt that needs low rates to survive. If they raise rates, we're talking about a wave of corporate defaults that will make 2008 crash look like a warm-up act. Don't do nothing and sit on their hands? That's not an option either. The markets will keep crashing, inflation will keep climbing, and the Fed will lose all credibility. So what's the Fed to do? All three options lead to a disaster. And when your central bank is out of options, you know things are bad. And then we have the bond market. I haven't even talked about that yet. Is already in free fall, with global long-term bonds suffering the second largest outflow on record just this past week. High yields, corporate bonds are getting crushed, and the Treasury bond market is seeing its weakest demand since May of 2024. This isn't some minor fluctuation. This is a major red flag. The bond market is the cornerstone of the global financial system. And when it starts collapsing, the entire structure begins to crumble. There is no easy fix for this one. And yet, the central banks will keep printing money, pushing us towards more inflation, more debt, and an all-in desperate attempt to avoid the inevitable. And then we have our meme stocks, just our champions. The champions. Yeah, those ones, the ones everyone thought were a joke. AMC and GameStop have become the stuff of legends. But don't mistake them for just some retail trader fantasy. These stocks are sitting on overinflated float with extreme short interest that's begging for a massive squeeze. When the institutional investors are hit with margin calls and forced to liquidate, these stocks are going to go nuts. Forget about being tied to the S&P 500. AMC and GameStop will decouple and head off on their own. How high could they go? That depends on how many shorts are trapped. But make no mistake, when the squeeze happens, it's going to be an absolute bloodbath for the shorts, and it's going to send those stocks flying higher than anyone could even predicted, even myself. The opportunity for the retail trader to take part in this chaos is real, and it's now. This is your moment to ride the wave, change your financial stars. The truth is, the financial disaster is a once-in-a-lifetime opportunity for those willing to take control of their fate. This isn't just about avoiding the fallout. It's about capitalizing on it. The rich are going to lose their grip. And the question is, are you going to sit by and watch? Or are you going to step in and seize the opportunity that's staring you in the face? There is no second chance here. No next time. This is the moment you've been waiting for. And if you're smart, if you're paying attention, and if you're ready to act, this could be the turning point that changes your financial life forever. So don't be fooled by the smoke and mirrors. The government isn't letting this happen. They're making it happen. And if you want to change your stars, you better get ready to play the game their way before it's too late. Japan's yen crisis, the perfect storm no one saw coming. Yeah, except them, of course. Let's start with Japan. Because let's be real, when it comes to the global economic disaster, Japan is the canary in the coal mine that no one's been paying attention to. Well, guess what? That canary just fell off its perch, and we're all about to feel the effect. The Japanese yen just hit the lowest point against the US dollar in 21 months. And don't think for a second that Japan can just hit the reset button and solve this. Historically, they've intervened to stop the yen from free falling, but newsflash, that's not solving anything. It's the financial equivalent of slapping a Band-Aid on a gaping wound. Yeah, it might stop the bleeding for a second, but the bigger the problem, the bigger problem is still there, festering underneath. Now, why is this happening? Well, Japan is like a financial leech, heavily reliant on the rest of the world for its energy needs. They import a mind-boggling 87% of their energy, but it's not just energy. That's the problem. Japan gets 70% of its oil from the Middle East, and it's all has to pass through the Strait of Hormuz. In case you didn't know, that little stretch of water is one of the most important and most volatile choke points in the world. If anything happens to that strait, Japan is royally screwed. I'm going to change that to royally fucked. And guess what? Oil prices are surging. Yeah, they're topping over $100 a barrel. Not only is Japan's energy imports bill skyrocketing, but the weak yen is just adding insult to injury. But wait, hey, there's more. A weaker yen means everything Japan imports just got a lot more expensive. Energy? Check. Food? Check. Raw materials? Double check. The entire cost structure of Japan is crumbling under the weight of its currency devaluation. And don't think for a second Japan can just hit the reset button. Like I said before, they ain't solving shit. But don't worry, the government can always step in and intervene, right? Wrong. They might try to play the hero, but all they're doing is delaying the inevitable. Currency intervention in this environment is a zero-sum game. It's like trying to patch a sinking ship with duct tape. The Bank of Japan might liquidate U.S. treasuries to prop up the yen. And as we're talking about this right now, I think they're planning on dumping about $626 billion worth in our treasuries. And guess who's probably going to follow right after that? Yeah, because they hate us. But here's where things get really fun. That could end up pushing U.S. yields higher, which, surprise, surprise, only tightens global financial conditions even more. So while Japan is trying to stop the bleeding, it's actually just making the problem worse. Global markets will feel the pressure, and here's the kicker. When Japan tries to save itself, it could drag the whole world down with it. Let's talk about the global domino effect for a second, because this is where it gets really interesting. Japan's weak yen is like a financial virus, and as it spreads, it's going to infect everything it touches. See, the Japanese yen has been the cornerstone of the carry trade for years. What's the carry trade? Glad you asked. It's this beautiful little game where investors borrow a low interest rate currencies like the yen, because Japan's money, right? And it worked until it didn't. Now that yen is crumbling. The cost of the borrowing in yen is rising. And those investors who thought they were sitting pretty are about to get hit with a wake-up call. The unwinding of the carry trade is going to send shockwaves through the global financial system. Picture this. Liquidity evaporates from risk markets like it's been sucked into a black hole. Stocks, bonds, and yes, even crypto will feel the pinch. There's no escaping this. The carry trade unwind, and suddenly the liquidity that has been fueling markets for years is just poof, gone. And when liquidity dries up, you get volatility, lots and lots of it. This isn't just some theatrical idea either. We've seen it happen before. When cheap global credit runs out, markets go into full-blown panic mode. So why is this such a big deal? Well, let's connect the dots. Japan is one of the largest economies in the world, and its currency collapse doesn't just affect the Japanese people. No. It has a ripple effect that sends shockwaves across the entire globe. Oil prices go higher because Japan's energy bills are out of control. U.S. bond yields go higher as Japan sells treasuries to save its currency. And don't forget, there's already a global debt crisis brewing beneath the surface. Corporate debt, sovereign debt, you name it. When markets start to panic, all of that debt is suddenly a huge problem. Central banks will have to step in with liquidity. But that's just like throwing gasoline on an already raging fire. The risk of inflation is already sky high, and we haven't even hit the worst of it yet. So on Twitter, when you see like the Federal Reserve is injecting $14 billion into the stock market to prop up the S&P or prop up markets, that is a load of horse shit. Because when the Fed goes ahead and injects liquidity into a market, it's going to inject probably between $50 to $100 billion. Not some paltry $14 billion. There's no such thing as a small fix in these markets, especially one that's overinflated. It just doesn't happen.
Hello.
Oh, hey. He wakes up from nap time. What's up?
Yeah, I just took a government nap on the financial system for a while.
Hey, we don't mind a government nap. I mean, that's fine. It's just funny. All this has just been hilarious.
So somebody added all up, and the Mag 7 lost $5 trillion in market cap this year.
Oh, yeah. We're not done.
Yeah, I don't think 14 billion is going to do a whole fuck of a shit ton of nothing.
It's going to do zero. That's why 50 billion, 100 billion, that might make a difference, but it's not going to make a difference when you're losing trillions of dollars because of overinflated equities.
$5 trillion in losses on the Mag 7 is enough fucking liquidity scalp to cover 15% of our total 39 trillion national debt.
Yeah, please. You just here. Let's throw it up on a wall. Hopefully, it sticks. It doesn't stick. It's just sliming down the wall. Ooze. It doesn't get better, folks. Here's the bottom line: Japan's financial problems are not just Japan's problems. They're everyone's problem. The yen collapse is the first domino to fall in what could be a global financial tsunami. The Bank of Japan might be able to slow the inevitable collapse, but they can't stop it. And when the carry trade unwinds, we're all going to feel it. This isn't just a Japan issue. It's a global crisis in the making, and it's coming faster than anyone can prepare for. So what does this mean for you? Well, if you're a retail trader, an investor, or someone just trying to make sense of all this mess, it's time to understand that the financial system is hanging by a thread. The yen's collapse is just the beginning, and it's going to lead to a cascade of events that will rattle markets, crush currencies, and possibly even trigger the next global recession. I should have wrote depression because we've been in a recession for years now. And guess what? If you're not prepared, you're going to be swept away in the tide of financial destruction. But here's the good news. If you're paying attention to what's going on, you have a shot at coming out on top. The elites may think they can control this mess, but in reality, they've created a monster they can't control. The system they built to protect themselves is about to implode, and it's going to take everything down with it. So unless you're smart enough to see the opportunity in all the chaos, you got one shot to change your financial future, but that window, it's closing fast. Are you ready to seize it? Hey, the Federal Reserve's impossible dilemma. Trapped in a room with no doors, but plenty of fires.
Well, they found a door.
Where's a door?
Well, allowing them to pledge indexes and the rest, like the Russell 1000 and the S&P 500,
but it gives you a
collateral for liquidity that
it just gives you a point.
Oh, you got naked shares that you short sold for as in your index from your index supply.
Yeah,
right. We'll take them.
Yeah, but here's the other part of it that you know exactly where they're pinched.
Oh yeah, they absolutely told you that. That they literally basically in the description said that it was for lending stresses.
Yeah.
And margin risks.
Yeah, but
where do you get lending problems and margin risk? Rehypothecated lending. What have we been saying forever? They've been fucking using ETFs and indexes to get deliveries on rehypothecated shares for rehypothecated lending.
Mm-hmm.
That don't have to report the actual underlying quantities other than what? The top 10?
Yeah, but now that exposes this. By them being able to do it, them being able to borrow cross currencies this way, they're now going to expose that risk.
Well, okay. So what you're saying is it brings the naked quantitative trading home to report?
Yes.
So then it's sort of an emergency only if you need to for the institution, because that's the last thing they want to do.
But at the same time, the only
if
way
they have to, right?
They have to. But if they have to, but then now you're getting your FTDs that are just basically through the absolute roof.
But then when it all shit hits the fan, who's left holding the fucking bailing bag by the Credit Suisse style assumption of assets?
It's a
ball. We do.
Not necessarily that the retail investor would be holding that bag. It's actually the Fed.
Exactly, our tax dollars.
Well, no, not our tax dollars. It would be the actual Federal
Fed
Reserve
balance sheet.
Yeah. It would be the Fed balance sheet.
The Fed balance sheet losses.
But who's putting on those losses on the Fed balance sheet? The banks. They're trying to cover themselves.
Yes, and when they become illiquid, what do they get? Tax dollars.
Then we have insurance policies that basically go
ahead. Insurance
and
ain't covering shit. They already know that.
Well, they have to go ahead and they're going to have to liquidate. And that still goes up through different platforms, OCC, NSCC.
Well, then they mark everything to book.
And once that happens, then guess where AMC
goes? Then the
through?
banks collapse again.
Exactly. They still get liquidated.
But don't they forward pledge them as assets to the Fed for that liquidity?
The Fed would still have to pay you. It's still part of that capital structure.
Well, yeah. Well, look, worst case scenario, the Fed would have to close out their losses on the
correct
Fed books.
Correct.
Which is a bailing.
Exactly. Which is still has to pay you, no matter what.
Right. Either way, the values are going to fucking go up because when they unwind it.
Exactly. Which brings us to their impossible dilemma, which is the Federal Reserve, the supposed superhero of the U.S. economy, is here to save us all from the chaos they've helped create. The Fed, with its infinite wisdom, is now standing at a crossroads and no matter which path they take, the outcome is a disaster. After weeks of war, sky-high oil prices, and job losses mounting like a bad sitcom, the Fed has found itself in a corner with no way out. And let's be clear, this isn't some tough decision they're facing. This is a train wreck with 3 tracks, and all of them lead to financial Armageddon. So let's take a moment to dive deep into the nightmare scenario that the Fed is currently drowning in. Spoiler alert, there's no happy ending here. Their first option is to cut rates. I know. It sounds like the kind of thing that would make the average person think, hey, that will fix everything, right? Wrong. With oil prices hitting $111 per barrel, gasoline prices approaching $4.20 per gallon, and food inflation already at a nasty 3.3%, cutting rates in this environment would be like pouring gasoline on an already raging inferno. The simple fact is, the last thing we need right now is more cheap money. But, of course, the Fed seems to think that slashing rates will somehow stimulate growth. What they're really doing is igniting a bigger inflation fire. And trust me, it's going to burn everyone in sight. Cutting rates is essentially signing the Fed's death warrant, as it would become the villain in the financial horror story. They'll be the ones who kick the inflation spiral into overdrive, driving costs even higher and making life more unbearable for everyone, except, of course, you know who. And they have the means to shield themselves from the fallout. Now we're on to second option. Raise rates. Oh, this one is just a peach. If the Fed raised rates now, it could very well trigger a corporate bloodbath. Remember 2008? Yeah, that's about to look like a walk in the park, but this time the debt pile is much, much bigger. Corporate debt has ballooned into the stratosphere. And with the economy losing 92,000 jobs in 1 month, thanks in part to the rise of AI automation, raising rates could be the first nail in the coffin for what's left of zombie companies that have been barely surviving on the Fed's previous low rate policies. These companies fail faster than you can say recession, but that's not all. Raising rates would send shockwaves through the entire financial system, accelerating the crisis and pushing the economy into a full-blown recession. This is like trying to put out a forest fire by throwing gasoline on it. You get the picture. And then we have the third option. Do nothing. The so-called hawkish pause. Oh, this one is a real winner. The Fed has become so paralyzed by its own indecision that it's stuck in this weird limbo of inaction. This pause isn't some bold strategic move. It's a desperate surrender. In this scenario, inflation continues to rage, markets keep sliding, and the Fed loses every ounce of credibility it has left. The pause becomes a joke paralysis in action. As inflation runs unchecked and the markets keep tumbling, the Fed's one scarred reputation will crumble faster than you can say lost decade. No one wants to talk about it, but this is the moment when the Fed truly becomes powerless. When you're backed yourself into a corner like this, there's no graceful way out. The hawkish pause is just the Fed's way of admitting that it doesn't have the guts to make a real decision. Let's get one thing straight. This isn't just some minor dilemma. This is an economic trap of the highest order. The Fed's choices are all terrible. And no matter which one they pick, it's going to make everything worse. Inflation is spiraling out of control, job losses are rising, and let's not forget the massive, suffocating pile of corporate and sovereign debt that's hanging over the global financial system like a ticking time bomb. Corporate debt alone is in the trillions, and at the same time, government debt is ballooning beyond reason. The Fed knows this hell they helped create, but now, with no good option left, they're caught in a vicious cycle of monetary policy desperation. This is the most dangerous monetary trap we've seen since 2008. The financial system is holding on by a thread, and the Fed is doing its best to balance on an edge of a cliff with a blindfold on. So let's recap the choices, shall we? Cut rates, and you stoke the fires of inflation even higher, making everyday life unbearable. Raising rates, and you collapse the entire corporate structure, triggering a wave of defaults and a possible recession. Do nothing, and you lose all credibility while inflation and market crashes run rampant. There is no good answer here. This is the Fed's nightmare, and it's a nightmare that they've helped create. And here's the kicker. The rest of us, the regular people, are stuck in the middle of this mess. The you know who are already making moves to protect themselves. So if you're not paying attention, you're going to be swept under the tide of financial destruction. But don't be fooled by the headlines or soothing words coming from the Fed. They're not in control. They're simply trying to delay the inevitable collapse, and every decision they make only makes things worse. Now you might be thinking, what does all this mean for me? Well, here's the deal. If you're not prepared, you're going to feel the pain. The Fed's dilemma is your dilemma. The crisis that's coming isn't some far-off abstract concept. It's already here, and it's already affecting your life. Whether it's rising prices at the gas pump, skyrocketing food costs, or job losses, we're all going to pay the price for the Fed's poor decisions. But here's the silver lining. If you can understand what's happening, if you can see through the smoke and mirrors, here's an opportunity to come up on top. The financial you-know-whos are betting on you not understanding what's going on. They want you to be passive, to ignore the cracks in the system, but you don't have to play by their rules. You can use the chaos to your advantage if you're ready. So buckle up, because the Federal Reserve's impossible dilemma is just the beginning. The next move is critical, and no matter which path they choose, the ride is going to be bumpy. But one thing's for sure, the people who understand what's happening now will be the ones who will thrive in the coming storm. And the ones who don't, well, they'll just be swept along in the flood of economic destruction that's about to hit. Dun, 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 the global debt crisis. The market's ticking time bomb. And guess what? It's about to blow, and you're not ready. Yield spike, recession, boop. All right, folks. Let's get real for a minute and talk about the global debt crisis. Because if you think the Federal Reserve's mess is the only thing that's going to bring this whole system crashing down, you're clearly missed the point. The Fed's little crisis, that's just the tip of a very large iceberg. Beneath the surface, the real devastation is bubbling away. And guess what? It's about to sink the whole ship. Let's break it down piece by piece so you can finally see the train wreck coming before it hits you square in the face. First up, sovereign debt. It's larger than ever, and it's not just a little out of hand. It's off the fucking charts. But hey, who cares, right? It's not like we need the government to pay off their debt anytime soon. Oh, wait, They do. And they have no idea how. Then we got corporate debt, bloated to the point that makes the U.S. national deficit look like pocket change. And don't even get me started on household debt. It's out of control, just like your credit card balance after the wild weekend trip you swore wouldn't break the bank. But here's the real kicker: derivative exposure. If you have no idea what that means, welcome to the party, because it's a ticking time bomb hidden under the financial system. And the worst part, these aren't some abstract terms you can ignore. These are the gears turning in the machine that's about to implode. And guess what? The rest of us are getting caught in the blast radius. Now let's talk about what this means in practical terms. When the financial system is this over-leveraged, it's not a matter of something that goes wrong. It's when. Whether it's little shock, like oil prices shooting past $100 a barrel, or catastrophic events like war in Iran, wreaking havoc on the global energy markets, the system is teetering on the edge of collapse. If you think the central banks are the ones to save the day, newsflash, they're not. These guys have one playbook, and it's as effective as trying to put out a forest fire with a garden hose. The central banks will do what they always do: cut rates, inject liquidity, and hope the circus keeps rolling just for a little bit longer. But here's the dirty little secret: this system is out of room. When you've built an economy this bloated, any attempt to raise rates or remove liquidity is like trying to pull the rug out from under an elephant. Guess what happens? The whole system crumbles. That's the real problem. This system can't handle high rates for long. Push the interest rate up too far, and the entire thing collapses under its own weight. And when that happens, the only thing the central banks can do is what they always do: pivot, back, forward, easing. But here's the thing: easing isn't a solution. It's just a delay tactic, a quick fix that only buys them time to print more money and risk more inflation. And when they start cutting rates again, what do we get? More inflation, more debt, more instability. It's a game of smoke and mirrors, with the elites, sorry, I said it, on the one side making sure their wealth is protected, and on the others watching it all go up in flames. The central banks don't care about inflation at this point. They care about survival. They're cornered. The only way out is to pump more money into the system and pray that something sticks. But here's the truth: there's no miracle coming. The system can't sustain itself for much longer. Now let's talk about what this means for you. You know, the people who aren't pulling the strings, the ones who are actually going to feel the fallout when everything comes crashing down. We're talking about rising inflation. We're talking about crashing markets. We're talking about job losses, business failings, and the collapse of pension funds. Yeah, it's all coming. And you know what? Them people in charge, well, they know this too. That's why they're frantically trying to protect their own wealth, stashing their money in gold, real estate, and other hard assets. But they'll be sitting pretty while the rest of us are left scrambling for scraps. A new system will be born. And guess who won't be invited to the party? You and me, the ones left holding the bag. But don't think you can sit back and just let it pass. The problem is debt, and it's suffocating the global economy. Governments, corporations, households, they're all in deep, and they can't dig themselves out. There's only so much debt you can pile on before the whole thing comes crashing down. This isn't just a too big to fail moment. It's more like a too big to fix moment. and no bailout is big enough to save this mess. The debt bomb is ticking, and it's only a matter of time before it explodes. And here's the kicker. The central banks are so desperate to keep this train on the tracks that they'll even risk more inflation just to avoid a total collapse. And you know what that means? More rising prices, more economic instability, more uncertainty. This isn't some far-off problem. It's happening right now. Sovereign debt, corporate debt, household debt, it's all piling up. And the system is trying in vain to keep everything afloat. And the reality is, nothing can hold this system up forever. So when it all comes crashing down, you better hope that you're prepared, because the fallout is going to be massive. We are witnessing the beginning of the end of an economic era. And when it all blows up, there won't be any going back. The debt bomb is ticking, and it's about to detonate. And the only question left is, how prepared are you for the fallout? You see, the central banks have no choice but to keep this game going. They can't afford to let the system collapse. They'll risk everything, including more inflation, to keep things from unraveling. And the elites know this. They've been preparing for this day for years. But you need to start preparing now. Because when the dust settles, it's going to be a very different world. The debt bubble is about to burst, and you're either going to be swept away by it, or you're going to be ahead of it. Get ready. The end game is here, and it's going to be ugly. And now, the piece to de resistance. Mwah. When the safe market breaks and the meme stocks become the pressure points, AMC, GME, and the mechanics behind the squeeze. You could take all this shit to the bank. This is all the mechanics that are in play for both AMC and GameStop. All for you. Now, let's talk about the bond market. You know, that thing that most people ignore until it decides to explode. Like a fireworks show gone wrong. And when I say explode, I mean it. We're seeing massive outflows from global long-term bonds. Corporate bonds are in chaos, and demand for treasuries are plummeting to historic lows. Oh, and let's not forget the bond market is in free fall, and treasury auctions are seeing the weakest demand since May of 2024. What's going on here? Well, you guessed it. The entire financial system is hanging on by a thread, and the bonds that were once a safe haven are now a symbol of how deep this hole goes. No one's coming to the rescue. Here is your bond market stress. Massive outflows from global long-term bonds. Here, bond stress. Here, collateral weakening. Or weakening collateral. Margin call triggered. That means forced liquidations. Sell everything. There's no treasury demand, so the government doesn't make any money. And that collateral that you thought was worth X is really worth nothing. So you got problems, and they only get worse. So what does all this mean for the meme stocks, specifically AMC and GameStop? You know, those stocks that everyone loves to laugh at, and yet here we are watching them potentially disrupt the financial system in ways that even the biggest hedge fund didn't expect. Now, here's the deal. These two stocks are sitting on massive floats with an insane amount of short interest, and trust me, that's a recipe for one hell of a squeeze. The market, particularly in the S&P, is teetering on the edge of a cliff, and once those institutional investors are forced to liquidate their positions due to the broader market altogether, I mean, if you thought the rise of these stocks was just retail trader fantasy, well, it's time to wake up and smell the margin call. The shorts are trapped. And when the squeeze begins, it's going to be unlike anything we've ever seen before. How hot?
This goes back to my SEC new index thing, where if anybody that studied the 2021 January episode, they tied it directly to the indexes.
There's that portion of it. There's also a wonderful
the basket effect
there's
is directly tied to the indexes, which is why they're allowing baskets of these small cap index funds to be pledged as forward collateral. But once that collateral diminishes and the appetite for that goes away, you get January 2021 and June all rolled up into one squeeze, right? But the thing, like, even today proved it. Like, they did that, announced that or whatever, and AMC had on balance volume differential of only 1 million shares, but had a 7.5. Actually, it was up like 11%, 14% on the 2-day, 3-day. So you're talking 1 million shares of imbalance on a 10 to 14% price swing. You have to do that 100 times.
100,000 times. 100,000 times? 100 billion times? I mean,
well, I'm just saying on the reported value.
Oh,
so you're already looking at 1,400% at 1 million a time imbalance.
Oh yeah, but here's
just based on recent numbers.
Now here's the other thing that no one took into account, but I did, because I read about it, and it was funny that I actually stumbled across this. Well, that all depends on how much short interest remains and how many of the big institutional players are caught in the crossfires. The answer, astronomically high. No one knows just how high they could fly, but we're talking massive short squeeze. Expect wild volatility. This isn't some kind of let's hope and pray retail fantasy. This is a calculated mechanical outcome based on the mechanics of the market. These short positions are like ticking time bombs, and when the floodgates open, it's going to be a roller coaster ride of epic proportions. Now, we're going to get into the nitty-gritty of how AMC's Ape shares and GameStop warrants are directly tied into the mechanics that could send both of these stocks through the fucking roof. First, a little history lesson to keep things grounded. The Ape units, AMC's preferred equity units that were issued in August of 22, were a separate class of stock, essentially a way for AMC to raise capital without diluting its common stock. This was a huge deal because it gave AMC shareholders a 1-to-1 special dividend in the form of Ape units. But here's where it gets interesting. When AMC underwent its 2023 reverse stock split and AMC's in the Ape conversion, the game completely changed. The OCC, the Options Clearing Corporation, issued a series of memos explaining how these corporate actions were going to affect option contracts and settlements. If you're thinking, who cares about memos? Think again, because these memos laid the groundwork for how Ape would eventually disappear and AMC common stock would take center stage in the options chain. In August of 2023, the OCC issued a series of memos detailing how the Ape units were converted into AMC common stock. The Ape ticker was delisted after the conversion, and all open options contracts were adjusted to reflect the new AMC shares, with any fractional shares being paid out in cash. Ape, gone, vanished, no longer a thing. All that preferred equity was now converted into AMC's Class A common shares. So what does this mean for you? The average person trying to make sense of this, it means the shorts who were betting on Ape are now faced with a massive AMC short position, and guess what? The rules of the game just changed. No longer can these shorts use the non-existent ape excuse. The OCC adjusted all contracts to ensure that the delivery only involved AMC common shares, not ape. In short, the short positions in ape were automatically converted into short positions in AMC. And as you can imagine, this is going to fuel the squeeze. For those of you who thought the squeeze was just a fantasy, this is where Joker Ape, I start my maniacal laugh. Here's the history of AMC Ape history and mechanics. Ape units issued. AMC reverse stock split. Ape converted into AMC common stock. Ape disappears. OCC contracts adjustments, which bring AMC reverse stock split, OCC contract adjustments, and 21 AMC shares per contract plus cash in lieu equals a big pile of money and a bear trapped.
Not only that, you forgot one aspect.
Go ahead.
Every unreported short share sold of the previous underlying AMC Class A CUSIP still owed the forward obligation on the one share delivery per 7 point whatever.
Yeah, correct.
So that is also in them obligation short bilateral.
It's all in the OCC contracts.
So it's actually 21 on that contract plus the
plus
AMC
7
word issuance, which could put it to per 100 is what, another 7?
Yeah.
So 28 per contract if you count that aspect on the merger.
Correct. I'll get into more. Let's talk about the details. Once AMC converted its ape units, those ape option contracts were adjusted to deliver 21 AMC shares per the adjusted AMC 1 contract, plus cash in lieu for any fractional shares. The OCC memo, pound 53089, made it crystal clear. When these option contracts were exercised or assigned, the deliverables would be AMC common shares. No more ape. No more confusion. The shorts who thought they were off the hook were in for a rude awakening. Now, their short positions were converted into AMC shares, and they would need to deliver those shares when the options are exercised. No magic escape hatch here. So let's break this down even further. Any short holder who had an open borrow position in APE pre-conversion now has an open short position in AMC common shares. That's right. Their short exposure is now AMC, and it's much more visible and much harder to escape. This is standard OCC procedure for any convertible preferred stock or merger where the deliverables in option contracts is adjusted to reflect the surviving security, in this case, AMC common stock. No special SPVs, no collateral swaps, just a straightforward conversion into AMC shares. The bottom line, the shorts are trapped. The AMC float is about to get squeezed in ways that the market hasn't seen in a very, very, very long time. And now, let's circle back to the broader picture. The bond market is imploding. Treasury demand is sinking, and liquidity is evaporating. When all of this starts to cascade, the meme stocks like AMC and GameStop will decouple from the broader market, and we will see these stocks rocket in ways no one predicted. The shorts, they're stuck. The squeeze is coming, and it's going to be wild. But this is not the retail trader fantasy. This is a calculated outcome based on real market mechanics that are being sent to or set into motion right now. So what does this mean for you? The bond market is blowing up, and at the same time, AMC and GameStop are sitting on massive short interest with ticking time bomb mechanics. When the institutional investors are forced to liquidate, the squeeze is coming. How high can these stocks go? Well, if history has taught us anything, it's that when the floodgates open, it's going to be an epic ride. Get ready, because the next few months could see AMC and GameStop surge in ways that make the rest of the market look like child's play. Now let's bring in GameStop, because this is where most people are still asleep. GameStop introduced something extremely important for the retail shareholder: warrants, structured equity exposure mechanisms tied to the ownership rights and future share issuance framework, alongside prior events like stock splits via dividends and evolving capital structure strategies. Now let's translate that into plain English so nobody gets lost. Warrants give holders the right to obtain shares under specific terms, usually at a fixed price or structure. They are not just extra shares. They are future claims on equity. And here's why that matters in this environment. When you introduce warrants into a heavily shorted system, you are effectively doing two things at once: expanding potential future demand for shares, because warrant holders can convert / exercise, and increasing pressure on existing short positions, because the total claim on the equity grows while the float dynamics tighten. Let's talk about the details. Once AMC converted its Ape units, those Ape option contracts were adjusted to deliver 21 AMC shares per adjusted AMC 1 contract, plus cash in lieu for any fractional shares. The OCC memo, you know the number, made it crystal clear. When these option contracts were exercised or assigned, the deliverables would be AMC common shares. No more Ape, no more confusion. The shorts who thought they were off the hook were in for a rude awakening. Now, their short positions were converted into AMC shares, and they would need to deliver those shares when the options are exercised. No magic escape hatch here. Let's break this down even further. Any short holder who had an open borrow position in Ape pre-conversion now has an open short position on AMC common shares. That's right, their short exposure is now AMC, and it's much more visible and much harder to escape. This is the standard OCC procedure for any convertible preferred stock or merger where the deliverables in the option contract is adjusted to reflect surviving security, in this case AMC common stock. Here's no special SPVs, no collateral swaps, just straightforward conversion into AMC shares. The bottom line: the shorts are trapped, and AMC's float is about to get squeezed in ways that the market hasn't seen in a long time. And now let's circle back to the broader picture. I reread this already.
Can I jump in real quick?
Go ahead.
Because you're also you have to consider the naked tokenized AMC value that was transferred as a naked borrow from bilateral crypto obligations with no path for delivery on behalf of is still owed. So if they borrowed from naked crypto supply that was never custodied, then they have no bankruptcy right for delivery on obligation, means that they get to eat the forward obligation to anybody that they naked sold that to.
Which is everybody. Let's just be honest. It's everybody.
Yep.
Yeah. So here's here's your flow chart for your warrants for GME. So the warrants were issued to retail shareholders. Future claims on shares. Potential exercise increases the demand. The existing short pressure amplifies. Short squeezed. This increases short pressure and reduces the float, aka short squeeze. But the funny part about this is that this keeps on going in a circle. No matter what. It is literally just a circle of short squeeze after squeeze after squeeze after squeeze. This isn't just one. Because whenever these retail shareholders exercise one of these warrants, they're fucked. Every time. And the circle of life just continuously happens. So combine that with what we already know about GameStop's the high retail ownership concentration, reduced effective float due to the direct registration trends, persistent short interest, both reported and synthetic exposures debated heavily, and historical evidence of extreme volatility under stress. January 21 didn't happen by accident. So what do warrants do in this context? They add another layer of future obligation into a system that's already struggles with delivery. Think of it like this. If shorts already owe shares, now there are additional instruments that can demand shares later. You're not reducing pressure, you're stacking it. And remember, this entire system runs on settlement and delivery, not vibes. So now zoom back out again and connect it to the bond market stress, where bonds weaken, collateral weakens. When collateral weakens, leverage gets pulled. When leverage gets pulled, positions must be closed. When positions must be closed, shorts become buyers.
Hence the index basket liquidity pull.
Correct. And here's the part nobody on TV will say out loud. Shorts covering is forced demand. Not optional, not strategic, forced.
Fire buys.
So while the broader market, like the S&P 500, may be sliding due to liquidity tightening, margin pressures, and economic slowdowns, AMC and GME have the structural potential to move the opposite direction under stress, not because they're better companies in that moment, but because they are mechanically positioned for dislocation. That's what a detachment looks like. Not hype, not hope, mechanics. Straight mechanics. I'm not giving you a pipe dream.
High frequency trading through an AI that only knows A to B.
I'm giving you
Close only.
Mechanics. Flat mechanics of how this works, how it will work. Not some dream of a merger, or not some dream of this happening or this happening or this. Flat mechanics. Straight out of a book. Here you go. Now, does this mean from infinite price? No. Let's stay grounded in reality. Price will always be determined by how many shorts are actually forced to close, how much liquidity is available during the squeeze, and how aggressively counterparties enforce margin, and whether regulators step in. And let's not pretend like they haven't before, but can it go violently higher than people expect? Yes, because when positioning is crowded and exits are small, price discovery stops being smooth and starts becoming vertical. Bond stress, weakening collateral, margin calls triggered. What does that bring? Forced shorts covering. Here's the warrant pressure. Retail buying. AMC Ape conversion pressure. GME warrants. GME detaches from the market. AMC detaches from the market. Retail still buying. Guess what happens? Mechanical squeeze. Poof.
It's the MMTLP week minus the rollover excuse of couldn't close because we got halted permanently.
Correct. But this is how this happens mechanically, factually. No hope, no dream, no prayer, no nothing. We doing it. Which is how it was always going to fucking happen. And this is where everything ties together cleanly. The bond market is cracking, liquidity is tightening, collateral is weakening, leverage is being questioned, and sitting right in the middle of the storm are two stocks with known short pressure, complex historical sediment structures, a retail base that don't behave like traditional institutional experts. So while the system is trying to deleverage and stabilize, these names don't quietly follow along. They become pressure points. And that's set up the next phase of this story. Because once margin calls begin cascading and liquidity really starts to dry up, the question is no longer if something breaks. It's who breaks first. And that brings me to the final word. And
I want to add something before you start the final
Go
word,
ahead.
too. Hence why they capped venture capital withdrawals in private credit funding, because that was the collateral value for the short exposure.
Correct.
7 stocks, $5 trillion loss in just this year, from the beginning of this year alone. And that's minus the withdrawals that were requested. And when they did the withdrawal request, they not only cut it from the 10% they were asking for to the 4%, but they actually revalued the portfolio value of their clients and took a 60% haircut on that.
Oh,
which
yeah.
meant that the actual withdrawals were 40% valued at 40% of the portfolio value in order to keep the collateral liquidity in the market.
Hold on one second. There we go. That
Can you guys hear me?
Oh, we can now. I've been muted, Matt. Yeah, you were talking.
Can I?
We heard the little one.
Yeah, we heard little one.
I forgot it defaults to my mic on instead of off. I gotta tell you this really quickly, this Facebook Marketplace story.
Okay.
So I sell flower bulbs from out of my greenhouse during spring, going up through Mother's Day. And this lady was supposed to come by and pick up a bag with 2 plants in them. Now I have eggs and other stuff in a big box on my porch for porch pickup. Stuff's labeled. You know, people, some of it, if there's more than one of a certain type of item, I will put people's names on it. If it's just by itself, it should be fucking obvious if you use your eyes what order is yours, right? We would assume. So this lady comes and she takes the entire box of shit off my porch. The entire box. Doesn't even pay attention to the fact that people's names were on some of that some of it was eggs, which is definitely looks nothing like plants.
Mm-hmm.
I don't know what she's doing at her house, but those items do not look anywhere close to each. Like, how did you make this mistake? It's not even an IMAX theater.
Oh my god. Uh-oh, SpaghettiOs.
So mind you, we were at dinner. This is while I had him, because we went down to have some dinner and scout out some camping spots over by the lake to see what was open. Because last year it was closed for most of the year because it flooded.
Mm-hmm.
So, you know, all of this is happening while I'm not even home. So she doesn't figure out, like, I have no idea what she takes until she gets home and goes, "Are these eggs supposed to be for me? Like, fuck, did you order eggs, lady? Did you order any? Because there's a, like, what the fuck?" And so she makes her husband bring it all back and puts it on my porch. And then doesn't even take her own order out of that box. Takes two other completely random plants off my porch. And she said, "These better be yellow." Like, the whole time she's yelling at me for her mistake. Like, "Why didn't you put my name on my order? Like, you had the only plant order and there were names on the other bags. Like, you didn't even look. So these better be yellow. I take really good care of my yard." Like, lady, you know what? Your guess is as good as mine because I have no idea what you fucking took. Like,
You get the gong.
I hope they grow. I hope they grow really nicely for you because I have no idea what they are.
Your guess is as good as mine. That's why I gave you a gong.
And she's threatening to leave me a 1-star review. Like, I already took care of that. And, like, just I can't. This is the old, like, everybody has an occasional Facebook Marketplace story that is very much like this, but this is like the first one I've had in a while.
He
It's
rug
the first
pulled
one.
you and then said it was your fault.
Oh my god.
Oh yeah, all of this is my fault, you guys.
Of
all of
course.
it is my fault because I should have written her name on the plants, even though there were names on all of the other orders. She didn't look at that either. Writing your name would not have made a difference, Betty, because
she
there were
work
names
for
on
the
the
SEC?
other orders.
I really hope she does.
Does she work for the SEC? Because that's the typical.
Right? I feel like she is either retired or a current government employee because this, like, what is, like, that's not even an IMAX theater. Like, what is going on with some of these NPCs lately? Like, really, that is so, like, I can't help but laugh, but, like, how do you even make that mistake? Like, eggs and plants do not look alike. There were names on those bags.
Well,
Like,
you know, they kind of, you know, in my dreams, they kind of look that way. You know, maybe I don't know.
and Jupiter is my hairbrush.
Oh, I thought it was a town.
You know the relative question to ask in these situations?
What spooned?
People are gonna hate me for this, but whatever. I don't care. I'm gonna say it. How many shots did you get again?
Oh my god.
Right? She came back twice. They couldn't, like, she didn't even take her own order at the end of the day. Honest to God, you guys, she took 2 random plants off my porch. Stuff is moved around. I don't know what the fuck she took. I have no idea. Good life. You want it to be yellow. Good luck, because I have no fucking clue what you just. I gotta go back and look at the camera footage because I bet it's just priceless.
I bet you she took brown. It's like brown, but brown.
I just. Like, you know what? Fuck you, Betty.
Yeah, Betty Boop.
You know what? Fuck you, Betty. I'm so tired of these fucking, like, the most entitled boomer Karen I've ever come across. As far as, like, what a way to kick off the season. We're gonna start with Boomer Karen.
I love it.
Betty Boop.
Boomer Karen. She had 2 attempts to get her own fucking order off of my porch.
Now,
and she was it's still out there in the bag. I don't know what the fuck she took.
Now, if anybody knows,
I don't know what the fuck Betty took.
Now, if anybody knows who Betty is, you should tell her to watch this episode on YouTube or on X, just so she can see the rant at the end of the show. It'll be perfect. Good old Betty Boop.
You know what, Betty? You know what? I hope they are yellow. I hope they grow wonderful for you. I don't know what the fuck you took.
I was hoping for like an eat shit, and I hope you took brown.
Yeah, fuck you, Betty.
There you go. That's even better. You know what's even better than that?
You know what?
Good old
And I
tank.
even put in the feedback 1 star, and I broke it down. Like, this woman took a whole box of items off my porch. Don't know what the fuck she took, but you know what? I don't even care anymore. I hope it grows really well for you. Like, I don't even care anymore.
Betty Boop got the toilet tank. That's what Betty Boop got. So don't you worry. But as much as I wanted to do a final word tonight, you know what? I really didn't want to. I'm going to let Joker Ape do it for me instead. And then stay tuned because I've been spending a lot of time in the studio recently. I got something special for a track for you on the way out. But, Matt, thank you for coming by, even though after your government scheduled nap. And Chaotic, we loved listening for dinner. And Betty Boop, you made my day. And with that, I leave you all with Joker Ape.
What's going on here? Why is all of this happening? The answer is simple, but devastating. The financial system has been rigged from the start, and the elites in the banking, hedge fund, and family office world have always known this. They've designed a system where profits come at the expense of the people. The truth is, the whole financial structure is a game to them, a game where the people are nothing but pawns. These elites have built their empires on the backs of working class people, and they continue to extract wealth from the masses while pretending that their success is a result of merit. The reality is, they're exploiting a system that's been crafted for them to win, regardless of the damage it does to everyone else. The role of the government in all of this is not to let it happen, it's to actively push it forward. The financial elites are not just aligned with the government, they are the government. And what do they want? More money, more power, more control. But at what cost? The truth is that they've built a society where money is the only thing that matters, and human life, dignity, and well-being are just secondary considerations. This is how the financial industrial complex operates. It's about maximizing profit at any cost, without any regard for the people who are being crushed along the way. And then there are the shills, the influencers and online personalities who pretend to be helping the retail trader. Let me be crystal clear, these people are not your friends. They don't have your best interests at heart. They're trained to build trust, to appear genuine, to make you feel like they are on your side. But their real job is to manipulate you. They break the bond of trust between you, the retail investor, and the truth. They're hired to mislead, misguide, and ultimately break the faith that you have in the financial system, so the hedge funds and banks can continue to exploit you without resistance. These shills aren't just spewing misinformation, they're actively tearing apart the social fabric that connects us as a community. They destroy the very foundation of what it means to trust each other, to work together, and to fight for the truth. And why? So that the powers that be can keep profiting off your ignorance, your confusion, and your division. They are the true enemies in this war. They may be doing it for the clicks, the likes, and the money, but their actions serve only to keep the financial elites at the top and to destroy the solidarity that makes us strong. But let me tell you why I'm here and why I'm willing to stand up against this entire corrupt system. I don't care about fame. I don't care if anyone from the enemy camp comes after me. I'm not here for recognition, for followers, or for the spotlight. I'm here because I genuinely care about this community. I care about each and every retail trader who is trying to make a living, who is trying to change their financial future, and who is fighting against a system that has been designed to crush them. I care because I know the pain of seeing the system rigged against you, of feeling like there's no way to win. But let me be clear, there is a way to win. And it's not by playing their game, it's by understanding their game, and using that knowledge to turn the tables. This is my fight, and it's a fight I'm willing to take on with everything I've got. The financial world doesn't care about you. The hedge funds, the banks, the influencers, they don't care about your struggles, your family, or your dreams. They care about their profits, and that's it. They want to dehumanize us, to make us nothing more than numbers on a spreadsheet, resources to be extracted and discarded. But I will never let them win. I won't let them break us, because I know what's at stake here. This isn't just about money. This is about who we are as human beings, about the values that should guide us in this world, the values of compassion, trust, and solidarity, the values of working together to build something better, something that serves the many, not the few. I am doing this for you, not for the clicks, not for the fame, not for any kind of personal gain. I'm doing this because I want to help you understand what's happening behind the curtain. I want to help you see the lies, the manipulations, and the dirty tricks that are being played on you every single day. I'm here to arm you with knowledge, with tools, and with the confidence you need to fight back. The system is rigged, yes, but that doesn't mean we have to accept it. We don't have to play by their rules, because they're not the ones holding the real power here. We are. I understand how hard this journey is. I understand the fear, the doubt, the uncertainty. I understand that many of you are just trying to get by, trying to build something better for your families and yourselves, only to be met with a system that seems designed to keep you down. But I also know that there is strength in unity, in understanding, and in fighting back. The truth is, we are stronger than they think. The more we come together as a community, the more powerful we become. This isn't just about making money. It's about fighting for our humanity, for our dignity, and for a fair system that works for all of us, not just the elites. I don't care if they try to come after me. I don't care if they try to destroy me or silence me. I won't back down, because I know I'm not in this alone. We're in this together, and as long as we continue to stand together, as long as we continue to fight for the truth and for the rights of the people, we will win. It may not be easy, it may take time, but we will win, and when we do, it will be because we did it the right way, with honesty, integrity, and a commitment to helping each other. This is why I do what I do. This is why I'm here, to help you, to help all of us, together, rewrite the rules of this broken game. I don't need to be the hero. I don't need the recognition. All I care about is that you, the retail trader, have the knowledge and the tools to break free from this system. I want you to win. I want every single person in this community to change their financial stars, to escape the rigged system that's been designed to keep you down, and to thrive in a world that's built on fairness, equality, and responsibility. Together, we can do this. We can take back control of our financial futures. We can break the financial industrial complex that's been designed to profit at the expense of our humanity. And when we do, we'll show the world what real power looks like. It's not in the hands of the elites. It's in the hands of us, the people. And we're just getting started.
Ain't no peace in this cage. We living in it every day. You think you gotta figure it out, but the streets don't play. Joker ape in the shadows, watching, waiting. I'm in the cage, but my mind's free. Chasing dreams that don't wanna chase me. Streets whispering secrets, it's all that I know. Every step's a gamble, but the chips don't show. Bass in my chest, I can feel the heat rise. Claws out, but I'm just trying to survive. We move like shadows in the night. Watch the city glow, we getting high. Joker ape, ain't no stopping the show. We go from calm to chaos, you know. In the cage, but I ain't locked in. We rise from the streets, let the games begin. Joker ape, we make them all spin. High on life, it's a dangerous sin. In the cage, but I ain't locked in. We rise from the streets, let the games begin. Joker ape, we make them all spin. High on life, it's a dangerous sin. Yeah, shadows creep, ain't no sleep in my eyes. Every move calculated, I see through the lies. Ain't no second chances in this jungle, we roam. Grit on my teeth, I won't never go home. Streets make me savage, no love for the fake. But the Joker inside, yeah, that's what they hate. I'm on the edge, but I'm still on top. One slip and I let it all drop. I breathe fire, the cage is cold. Joker ape got the world in a hold. In the cage, but I ain't locked in. We rise from the streets, let the games begin. Joker ape, we make them all spin. High on life, it's a dangerous sin. Joker ape, ain't no myth, it's the truth. Trapped in a cage, but we're still the kings of the streets. Remember, every crown's built on chaos. Ain't no peace in this cage, we live in it every day. You think you got it figured out, but the streets don't play. Joker ape in the shadows, watching, waiting. I'm in the cage, but my mind's free. Chasing dreams that don't wanna chase me. Streets whispering secrets, it's all that I know. Every step's a gamble, but the chips don't show. Bass in my chest, I can feel the heat trying to survive. We move like shadows in the night. Watch the city glow, we getting high. Joker Ape, ain't no stopping the show. We go from calm to chaos, you know. In the cage, but I ain't locked in. We rise from the streets, let the games begin. Joker Ape, we make them all spin. High on life, it's a dangerous sin. In the cage, but I ain't locked in. We rise from the streets, let the games begin. Joker Ape, we make them all spin. High on life, it's a dangerous sin. Shadows creep, ain't no sleep in my eyes. Every move calculated, I see through the lies. Ain't no second chances in this jungle, we roam. Grit on my teeth, I won't never go home. Streets made me savage, no love for the fake, but the Joker inside, yeah, that's what they hate. I'm on the edge, but I'm still on top. One slip and I'll let it all drop. I breathe. Joker Ape, ain't no stopping the show. We go from calm to chaos, you know. In the cage, but I ain't locked in. We rise from the streets, let the games begin. Joker Ape, we make them all spin. High on life, it's a dangerous sin. Shadows creep, ain't no sleep in my eyes. Every move calculated, I see through the lies. Ain't no second chances in this jungle we roam. Grit on my teeth, I won't ever go home. Streets make me savage, no love for the fake, but the Joker inside, yeah, that's what they hate. I'm on the edge, but I'm still on top. One slip and I let it all drop.